Hello and welcome back once again to Mainstream Cryptos, the channel where we do our best to help you invest and not just gamble. It's your weekly news with Abby. Hi. And today, once again, we are going to be looking at the 15 most important events that have been happening in the crypto world in the last 7 days. There's some pretty hot stuff on the table, so let's jump right in. Number one. Solana has been doing pretty well for itself, and here is what fueled its massive 50% rise, which happened in just hours. SOL, or SOL, the native asset of the Solana blockchain, has gained significant attention in the crypto market following its massive 50% spike within a few hours. Here is a tweet by the sentiment feed. While traders are celebrating the resurgence of Bitcoin, which is back over $21,000, and Ethereum, which is back over $1,550, Solana is the real star as the weekend is kicking off. This was last weekend, or this weekend just passed. Up 22% in the last 2 hours alone, Solana has been fueled by liquidated shorts. That is according to Sentiment. Sentiment, an on-chain analytics firm, believes that Solana's astonishing rise might have been caused by a short squeeze. In simple terms, a short squeeze is a rapid increase in the price of an asset, owing primarily to excessive short selling. In a chart posted, Sentiment wrote, Solana has surpassed the $22 mark and has nearly tripled since bottoming out at $8 2 weeks ago. Shorts propelled the bounce. According to the on-chain analytics firm, Solana has seen a shorting bias by traders on Binance consistently over the past month. It noted that even larger ratios of Solana shorts began opening right as the price bottomed out on December the 30th. Solana's price has risen by 170% since this bottom was reached. Fantastic news, and it seems like the new year is starting well for Solana. Number two, another piece of news on Cardano. ADA is apparently being integrated with Python. Without a doubt, Cardano holders can be proud of the altcoin's development activity, because even with the sharp drop in capitalization that ADA experienced in 2022, alongside the other cryptocurrencies, developers have not abandoned the crypto network and continue to bring improvements and new features. With smart contract platform activity leading its rivals, 2023 could also be a year of significant innovation. One of the pieces of news has already arrived through the first contract script in Python. This innovation is still being tested and developed. Thus, a perfect example of what it might look like was shared by Cardano developers through a transaction that took place on January the 10th, which indicated that there are plans to integrate contracts into PyCardano, an altcoin library in Python. This vital step in Cardano's development is thanks to Yopsin, a new Pythonic programming language which the developers describe as efficient and secure. Yopsin can also be classified as a translator. It takes code written in Python and turns it into the smart contract language that Cardano blockchain can understand, Plutus. Also, it analyzes the different parts of the Python code and finds ways to make it faster. What are the benefits for Cardano? As noted by developers, Python is one of the most user-friendly and intuitive programming languages. For this reason, many programmers and even the curious have programmed in it before. With this feature 100% functional, we can expect more projects to be launched on the Cardano blockchain, making it grow further in front of other Ethereum killers. However, the reader and listeners needs to know that development is still in its early stages and developers will do more testing before its effectiveness is certified. If the new functionality arrives at the pace Cardano delivers, ADA investors will have to wait a long time for Python to talk to Plutus. News item number 3. ARK Invest CEO adds blockchain to overlooked innovations in 2022. Cathie Wood, the founder and chief executive officer of American investment management firm ARK Invest, published a letter on Thursday attempting to explain what the equity market overlooked in 2022. The star investor noted that a wall of worry blinded the market to recognizing edge-cutting innovations and inventions like blockchain technology and digital wallets, as well as the introduction of the ChatGPT bot developed by OpenAI. Bringing to account the liquidity crunch and bankruptcy filing of FTX, Kathy assessed how Bitcoin and Ethereum have not failed to provide decentralized transaction solutions. Well, I fully support her in that analysis. Hurrah for 2022, and we look forward to great things from the crypto world in 2023. Number 4. Of course, no one has forgotten about FTX. FTX is greenlighted to sell 4 independently operated subsidiaries. The Bankruptcy Court of Delaware has approved bidding procedures for 4 of FTX's independent solvent subsidiaries in an attempt to generate money to repay the creditors. For those of you who don't know, FTX filed for Chapter 11 bankruptcy last year. In Thursday's hearing, Judge John Dorsey, currently overseeing FTX's liquidation, cleared the troubled exchange's motion to sell 4 key units: derivatives arm LedgerX, stock clearing platform Embed, FTX Japan, and FTX Europe. For the uninitiated, FTX Japan and FTX Europe were subject to license and business suspensions in December last year. The court filing, made by Kevin Kofsky, a partner at Perella Weinberg, the investment bank representing FTX US and affiliated firms, read: approximately 117 parties, including various financial and strategic counterparties globally, have expressed interest to the debtors in a potential purchase of one or more of the businesses. Number 5. Still stuck on FTX, the NBA giant Miami Heat officially terminates a naming rights deal with FTX. So many people, as you know, don't want to be associated with this firm that is, to put it quite frankly, very badly off. One of the most successful NBA teams, Miami Heat, finally annulled its partnership with the cryptocurrency exchange FTX. As a result, the home ground of the basketball giant will no longer be called FTX Arena. A federal bankruptcy judge officially cancelled the collaboration between Miami-Dade County, which is the territorial division where the NBA team is located, and FTX. The ruling determined that Miami Heat is allowed to remove the platform's initials from its facility. Collaboration between the two entities vanished in November 2022, shortly after the trading venue filed for bankruptcy protection. Back then, Miami Heat described FTX's demise as extremely disappointing, but declared that it will permanently end the relationship. It remains unknown what the new name of the arena will be. Number 6. Skybridge Capital founder plans on buying back shares sold to FTX. The founder, Anthony Scaramucci, has said that his firm may repurchase the majority share it sold to the defunct cryptocurrency exchange FTX in the coming months. He also made claims of fraud on the part of the platform and its previous CEO, Sam Bankman-Fried. Scaramucci recently expressed optimism to CNBC in an interview that Skybridge Capital will be able to repurchase the 30% stake it sold to FTX in the coming months. This will occur when all involved parties have publicly disclosed all relevant information about the trading venue's closure. News item number 7. This is quite an unusual and interesting piece of news. So ChatGPT answers crypto's biggest questions: Bitcoin or Ethereum? The infamous AI bot answers whether Satoshi's identity has been confirmed or not. We decided to ask ChatGPT a number of questions related to Bitcoin and crypto adoption, including those that are still hotly debated by humans. Here's what the infamous bot had to say. In answer to the question, Bitcoin or Ethereum? We first asked what ChatGPT thought about Bitcoin. Does Bitcoin have intrinsic value? Many of Bitcoin's biggest critics, such as gold bug Peter Schiff, would say no, arguing that the asset is purely speculative and destined to crash to zero. Yet the AI bot's answer was a bit more nuanced. Some people might argue that Bitcoin's decentralized nature and its ability to function as a digital store of value could be considered as intrinsic value, it stated. GPT isn't all-knowing, however. It admitted that the identity of Bitcoin's pseudonymous creator, Satoshi Nakamoto, has not yet been revealed and is not publicly known. Well, there's a bit of AI intelligence for you. And moving on to number 8. Of course, we have to take a look at what the SEC is doing, and they have filed a complaint against Gemini and Genesis for allegedly selling unregistered securities. What is the story behind this? The Securities and Exchange Commission has filed a complaint against Genesis Global Capital and Gemini Trust Company for allegedly selling unregistered securities to retail investors in the US. The SEC is seeking permanent injunctive relief, disgorgement of ill-gotten gains, plus front-end interest and civil penalties. Both companies raised billions of dollars by offering and selling securities to US investors through the Gemini Earn crypto asset lending program. Gemini, a US cryptocurrency exchange, and Genesis, a subsidiary of Digital Currency Group, teamed up in December 2020 to offer cryptocurrency lending services. The SEC says that Gemini charged a fee for its services that sometimes amounted to 4.29% of the returns paid by Genesis to investors. In November 2022, Genesis stopped paying interest to Gemini's clients and halted withdrawals, claiming it lacked sufficient liquid assets to fulfill withdrawal requests due to the volatility of the crypto asset market. However, at the time, Genesis held approximately more than $900 million in assets from more than 340,000 Gemini investors, who were forced to cancel the Gemini Earn program in early January without the ability to get a refund. As a consequence, SEC Chairman Gary Gensler alleged that Genesis Gemini offered unregistered securities to the public, bypassing disclosure requirements designed to protect investors. Gensler said the complaint aims to show that crypto lending platforms and intermediaries must comply with US securities laws. In this instance, I think the SEC is actually right to crack down hard against these companies because clients have clearly had a rough time of it. And whose fault is that? The company. Let's take a look at piece of news number 9. Financial giant Société Générale withdraws $7 million in DAI from MakerDAO vaults. France-based multinational financial services giant Société Générale has withdrawn $7 million in the cryptocurrency-backed stablecoin DAI from MakerDAO out of a vault that has a debt ceiling of $30 million in DAI. As the block reports, Société Générale was approved to start a MakerDAO vault last year after a vote from the decentralized autonomous organization's members approved its creation. After several months of inactivity, the financial services giant has withdrawn $7 million worth in DAI. The vault from which the funds were taken let Société Générale borrow up to $30 million in the cryptocurrency from Maker. The firm initially took a $30 DAI loan before taking out the larger chunk. Its annual fees are 3.5%. The loan is backed by covered home loan bonds worth $40 million that were issued by Société Générale. The move is seen as an example of how traditional finance players can leverage decentralized finance. Number 10. Huobi partners with Solaris to launch crypto-to-fiat debit card in the European Union. For many traditional banks, bridging the divide between digital and fiat currencies is a top concern as the crypto industry continues to enter the mainstream. Huobi, a cryptocurrency exchange, has announced that it would create a cryptocurrency to fiat debit card in collaboration with Solaris, a European financial services company. Because Visa supports the initiative, Huobi users may spend their digital assets anywhere in the world. In the second quarter of 2023, users in the European Economic Area, the EEA, will be able to get the card. News report number 11. Let's talk about a little bit of Binance. Binance has announced support for the upcoming Terra Classic upgrade. Binance, a cryptocurrency exchange, has announced today that it would facilitate the upgrade to Terra Classic, a project that sprung from the defunct Terra ecosystem. The update was scheduled to take place on Saturday, the Saturday past. The update was scheduled to take place around 4:50 UTC on Saturday after the Terra Classic community voted to implement governance proposal 11242 to stop the reminting of some of the burned Luna Classic tokens. In response to the precipitous drop in the on-chain burn rate of Luna Classic tokens over the previous 4 weeks, Proposal 11242 was submitted at the start of the new year with the intention of halting Luna Classic reminting from burns by essentially lowering the seigniorage incentive policy to zero. Over 2/3 of the nodes in the network approved the plan. Number 12. Logan Paul unveils 1.5 million cryptozoo recovery. As part of the plan, Logan Paul stated that he will commit 1,000 Ethereum to repay disgruntled investors who want to make an exit via burning their cryptozoo NFTs, or non-fungible tokens. The YouTuber Logan Paul has unveiled a 1.5 million recovery plan for the people who invested in his beleaguered non-fungible token project cryptozoo. Announcing the move in a video shared via Twitter on January 13th, Paul reiterated that he is no longer looking to sue fellow YouTuber CoffeeZilla for defamation over accusations he made in a critical series of videos on Paul's net project. As such, Paul emphasized that he is instead focusing on fixing cryptozoo, delivering on the roadmap, and making things right for fans and investors. Quote, "The fact is, suing CoffeeZilla is not going to help cryptozoo holders, so I do need to focus my attention where it should be, which is on fans and supporters of me." Paul outlined that his recovery plan consists of 3 stages. Firstly, he and his manager, cryptozoo co-founder Jeff Levin, will burn their Zoo token holdings so that they have no financial upside in the game, and so that the token supposedly has more value. Secondly, he claimed that he will personally commit 1,000 Ethereum as part of a rewards program that enables disappointed investors to burn their NFTs to get the initial 0.1 Ethereum mint price back. Finally, Paul noted that the 3rd stage is to obviously finish and deliver the game as outlined in the white paper, which was initially touted as a play-to-earn game that involved breeding animal NFTs to receive Zoo token rewards. To say that I am disappointed in how this was handled internally is an understatement. There's a full internal investigation going along with an audit, and we are going to pursue full legal action for whoever needs to be held accountable. Number 30. Some interesting news from Bulgaria. The authorities charge 4 individuals following the raid on the Nexo office. Following the January 12th raid on Sofia offices, Nexo described the prosecutor's actions as kick first, ask questions later approach. That sounds vicious. Less than 48 hours after a raid on cryptocurrency lender Nexo's offices in the Bulgarian capital of Sofia, prosecutors have reportedly charged 4 people. Authorities charged 4 Bulgarian nationals with forming an organized crime group, which may have included activities related to money laundering and unlicensed banking. The country's National Police Service reportedly seized a number of assets as part of the investigation, including cryptocurrency, cash, and computers. Following January the 12th raid, Nexo described prosecutors' actions as a kick first, ask questions later approach. The company reportedly planned to file a lawsuit seeking compensation for damages caused by police actions, alleging authorities did not show a search warrant or identify themselves to Nexo employees. "We are always cooperating with the relevant authorities and regulators," said the lending firm. Number 14. Let's move over to take a look at Celsius, whose mining arm has announced a $1.3 million sale of equipment. According to Celsius, Société Capital made the best offer for the mining rigs following discussions with several brokers and market participants. The mining arm of crypto lender Celsius Network has issued a notice for the sale of $1.3 million worth of mining equipment as part of its bankruptcy case. According to Celsius, Tuzi made the best offer for the miners following discussions with several brokers and market participants. The lending firm announced in January that Core Scientific had shut down more than 37,000 Celsius-owned mining rigs the firm had been hosting. Celsius filed for Chapter 11 bankruptcy in July 2022, leaving a reported $4.7 billion in user deposits locked up on the platform. In a December court ruling, a federal judge said Celsius had until February the 15th to file a restructuring plan. And our last piece of news for today and this week, number 15. Because we have to end on a positive note, Wire has secured new funding and is lifting the withdrawal limit on users. Wire, a cryptocurrency infrastructure provider, has announced it has secured new funding and therefore will be lifting the amendment on its withdrawal policy that restricted users from cashing out more than 90% of their assets. According to a tweet from the platform, the fund which boosted its liquidity was done by an undisclosed prominent partner. Going forward, the regulated institution will be able to continue its services normally without putting a hold or conditions on its withdrawals. In addition, Wire said it will start accepting deposits from customers. And that is us for this week, folks. All in all, it hasn't been a bad week for crypto, and we can hope that things will look positive going forward in the new year. Don't forget to like and subscribe for more news, tips, and tutorials on how to do more investing and less gambling. I'll be seeing you.